Hi, I'm Vince Molinari, and welcome to FinTech TV. We're broadcasting from the iconic New York Stock Exchange, and I'd like to welcome my friend, Hubert Danzo, who is the CEO and chairman of Africa Investor AI Group. Hubert is also chairman, CFA, New York Global Asset Owners Advisory Council. He is the chairman of the African Union's Continental Business Network, or CBN, and also chairman of the African Green Infrastructure Investment Bank. This is the man, dear friend. So great to be in person here at the New York Stock Exchange, Hubert. It's been too long. Welcome to the New York Stock Exchange.
Thank you very much, Vincent. Always a pleasure. Always a pleasure to be here with you, and congratulations on your excellent work. I just see growth upon growth upon growth. So kudos to you.
Thank you, my friend. We have such an amazing team, and the great benefit of continuing to have support and interviews and all the wisdom coming from great friends like you.
Right.
So again, special moment for me to have. Gosh, we haven't been together in so long, given COVID. So let's jump in. You've been in New York City. We've had United Nations General Assembly,
yes.
Climate Week. You've been here rocking and rolling, shaking some things up. Tell me what you've been up to.
Well, I think, it's really great to be here, as I said before, but even prior to coming here, I think there's been some really exciting things that have happened this year. This is the year of change on the leadership level. I mean, we're seeing leadership across the climate agenda, we're seeing leadership across the multilateral development banks and the international financial institutions. So let's just take a couple of steps back.
Yeah, please.
So in June, we had the Macron New Financial Pact Summit, where we brought together all of the heads of state working with the multilateral development banks. Very critical in the lead up to this Climate Week and this UN General Assembly. Following that, we had the Africa Climate Summit, again, where all of the African heads of state, the other key leaders that attended the Macron Summit on this new financial global reform agenda fed into that agenda. And I think what that's really done is repositioned Africa at a time when we're looking at the Sustainable Development Goals Review, which is what's happened during Climate Week, as we look at the global stocktake, as we lead into COP28. Africa has been positioned as the new green industrial investment opportunity of our generation for institutional investors. So I just wanted to give you that little bit of background as to why it's really been very important being here during this week, as distinct from any other UN Climate Week or UN General Assembly.
Hubert, I can't overstate how powerful that is, and I want to dive into that a little bit. You and I have been having conversations for years, and this repositioning, as you're calling it, or frankly elevating the continent and bringing visibility, awareness, but really taking this new leadership, if that's the fair characterization, around climate and the continent. That is so massively important as we think about the planet being one people, but really the continent using its resources, its intellect, its convening power, its entrepreneurship to elevate the climate conversation and the action.
Yes. No, absolutely. I mean, it's an absolute no-brainer. I think where there's been a little bit of a disconnect is that the continent has really been positioned historically as more like a development challenge as opposed to an investment opportunity. And now when you look at climate and the needs, I mean, we've got over 40% of the critical minerals for the green technology drive. And anyone with a cell phone has at least 6 grams of cobalt from an African country in there, so we're already connected. But we haven't been creating that uplift opportunity for institutional capital, because we've really been evacuating the resources, in a raw mineral form, when, that's about if you look in the EV industry, that's about a $9 billion sort of evacuation of resources opportunity. But then when you start adding value, which is where we sit now as the investment community, how can we participate in that sort of growth? So when you add value to the 9 billion, for example, as you look at the EV industry, it suddenly goes to 55 billion when you start processing it. But that's not even the exciting thing. The exciting thing is when you start instituting and creating value chains in the continent, it becomes a $7 trillion opportunity.
7 trillion.
7 trillion. So you go from a 9 billion to a 7 trillion. Our institutional capital, African pension funds, African sovereign wealth funds can back that up. Seed and anchor investment. Then we crowd in our global institutional peers who act as the off-takers for that market. We then become a very significant player. That's not even taking account of the fact that everywhere around the world, as you know, Vincent, there's new legislation about how you manufacture, how you sort of produce your goods and services in a decarbonized way. So everyone has to decarbonize their manufacturing processes. Well, we have the most super abundant natural capital. Sun, wind, hydro. So we are actually creating what we are describing as green industrial cities in Africa, which will be the absolute superior special purpose investment destinations for green industrialization. So companies from around the world that want to decarbonize their manufacturing processes, there's going to be special purpose destinations in Africa that we're investing in as institutional investors, as the African Green Infrastructure Investment Bank. And then we're forming these really incredible technology and knowledge transfer partnerships to manufacture and add value to green technologies and supply this global $10 trillion per annum and growing global green industrial economy. So no more just evacuating resources. It's not really a strong play for us as institutional investors, but really working, as an ecosystem. We call it multipolarism. Because we believe, multipolarism. We believe that in this multipolar world that we're living in now, it's not just good enough for Africa to say, come and satisfy our development needs or our financing needs, or for another continent to say, come and satisfy our development or our security or our financing needs. We turn around and say, how can we work together collaboratively, share technology, share expertise, bolster market access, and collaboratively feed into that global $10 trillion and growing investment opportunity around climate and around the SDGs, and help the world decarbonize at the same time and develop. And that's why we as asset owners see this as a generational investment opportunity of our time.
Maybe multi-generational, because you really hit that whole framework. Didn't think we'd be talking about green and industrial development in the same sentence, no less the leadership in creating that on the continent. But I think it's really that value proposition of, as you say, moving that from just pure extraction and perception of development to true leadership of this coalitions of collaboration. Maybe it's SDG 17 in its very essence.
Absolutely.
And moving that forward. But talk to me a little bit more about the African Green Infrastructure Bank and what you have going on there.
Yeah, so we're basically a consortium of long-term institutional investors anchored by African pension funds, African sovereign wealth funds, and we have a number of global institutional investors that co-invest with us on the equity side around large infrastructure, large green industrial infrastructure. So we've got green hydrogen projects, we've got solar manufacturing plants with new recyclable technologies. There are, again, these green industrial city type complexes that we're putting together. So we're actually investing in some of the big strategic corridors, green hydrogen, ammonia going into Europe, ammonia going across Africa for fertilizer, boosting our agriculture. So it's a real cyclical play and a strategy. So we're very, very excited about that. And the meeting that I mentioned to you, which has really been one of the key turning points in terms of the overall leadership in this, is the Africa Climate Summit. I think what a lot of people didn't quite understand about that is the declaration. It's called the Nairobi Declaration. Now, this Nairobi Declaration is as significant to the asset owner community interested in Africa, both African institutional investors as well as global institutional investors, as the Paris Agreement is to the global market. It sends...
That's a pretty big statement.
It's a very big statement because it sends exactly the clarity that we need about government's commitment to making the climate environment investable. I mean, there's this whole big conversation going on at the moment. You can't accomplish anything. Africa, we've got about $3 trillion worth of nationally determined contribution investment opportunities. So nationally determined contributions are the projects that the governments have committed to decarbonize the markets, and that's what gets reported at the COP summit, the Conference of Parties summit. We're going to, it's under the African presidency right now, under Egypt, but then we're now going to be going into the UAE. So those particular projects need scale. You can't just turn up with 5 projects and then take 100 years to just try to evaluate them and determine whether you participate or not. The Earthshot has been demonstrated to us, and I think our leaders have been very quick to pick up on that.
The Earthshot. We talk about the Moonshot so many times.
Yeah.
Tell me about the Earthshot.
Well, the Earthshot is really just taking it to that moonshot, but a different level as it relates to the climate, people, planet, and nature from an investable standpoint. And we think that to accomplish these, what we describe as investment Earthshots, you need to have government sending a very clear market signal. And we believe that there are 2 good examples of where market signals have been sent that the institutional market has been able to respond to in a very meaningful way. One
Can you
is,
share?
Yes, absolutely. One is the Inflation Reduction Act. The Inflation Reduction Act, hit right here in the United States, has mobilized $500 billion in the last 12 months. I think 2 or 3 weeks ago was the stock take after 12 months.
Yep.
Well, that's more investment in 12 months than Africa received in foreign direct investment across all sectors in the last 10 years. So we think that is not a bad model to emulate. Of course,
Puts it in perspective, that's for sure.
Yes, we'll localize it, and there are a number of things that we have that we think we can make it a little bit special. There are new innovative instruments that we can bring to bear to create incentives. For example, we have about $4.6 trillion of carbon credit headroom between now and 2030. We're going to securitize that, and we're going to make some of these new innovative instruments available to be able to crowd in private capital at scale, to be able to add value to our goods and get access to that $10 trillion and growing market. And I think if you then, so that's a national example to your question there. A regional example is the European Net Zero Industry Act, which is essentially a regional version of the Inflation Reduction Act. So we're basically, through the Africa Climate Summit, we've now got a framework because of the Nairobi Declaration to really do exactly the same thing, but in an African fashion. So that is the market signal that's really been sent for the global institutional investors that say, well, I know that there's sort of 6 to 8 grams of African content in the phone, and I also know that it could actually be manufactured in Africa, because I know by the end of the century you're going to have 50% of the world's workforce because of your youth bulge, and I already know that you've got over 60% of the supernatural capital to be able to decarbonize the manufacturing process, and on top of that you've got 40% of the critical minerals that are going to be that are in high demand, selling at a premium for all of these new green technologies that we're committed to anyway. So that's why we know that this is just...
Sounds like we should be paying attention, Professor.
Well, we are, and we're paying attention by making those key investments in the future, and it's really exciting, I have to tell you.
Incredibly exciting. Hubert, I know we have to get you back up to the United Nations for your meeting, but I've got to keep you another minute or two. COP28 coming up right around the corner. Tell me what you're thinking. What do you think the outcomes are going to be? What are you looking to achieve for perhaps the African Union and the planet itself at COP?
Yeah, look, I think I'm going to come back to this whole Earthshot thing. There's a couple of fundamental challenges that I think could benefit the overall ecosystem, and I think that the UNFCCC, who lead COP, could do well to pay attention to. We're now talking about a $23+ trillion just across emerging markets investment opportunity, investment need. Things need to be done at scale. If the public sector need to mobilize public capital at scale, they shouldn't come to us as the private institutional investment community. The public sector know how to mobilize public capital at scale. Conversely, when it comes to mobilizing private capital at scale, which is what is required in emerging markets and developing countries, because governments don't have the fiscuses to be able to provide all of those incentives as maybe some G7 countries do, it's the private sector that's going to need to be able to mobilize that capital at scale. Right now, the UNFCCC agenda is allowing the private capital mobilization agenda to be led by the public sector. It is a fundamental mistake. It's a fundamental missed opportunity, because everything needs to be done at scale to get to that level. It's unprecedented levels of investment that will be required in an unprecedented short time frame. So what we're hoping that COP28 will do is really create a space for the heads of state and government to work strategically with the large pools of institutional capital. I always put it this way. You know, right now you've got governments spending 90% of their time on the private capital mobilization agenda. And in fact, it's actually a private capital mobilization market failure, and I'll tell you why in a second. So you've got governments spending 90% of their time working with the multilateral development banks on the private capital mobilization agenda, of which, even after all these reforms that we keep calling for from the MDBs, they will only be able to solve 10% of the climate investment gap. And
fairly inefficient.
And we're spending less than 10% of the time working with the institutional 150 to 200 trillion pool of institutional assets that could solve 90% of the climate investment gap.
Got to flip that, huh?
Got to flip that, and I think that's really what we hope to see. That's what we're going to be calling for at COP28. And not only at COP28, we're actually going to try to get this institutionalized into the UNFCCC process. We think that, we use this phrase that, if you really want to get to scale, and you want to get to scale on a private capital basis, you really need to stop trying to make investment developmental. You should rather be trying to make development investable.
What a better way to close out, Hubert. What a delight having you with us today.
My pleasure.
Thank you. And we'll be following up soon, and perhaps we'll be together in COP.
I look forward to that.
Thank you.
Good job, my buddy.
You got it.
Thanks.
Thank you.